Hello everyone, I'm Rob Smith, in the Black Quant Edge VTF here, T3 Live with this week's market wrap-up. And, you'll hear him talk, the volatility. Yeah, you remember that day when we almost make a lower low? So, really still nothing, because 300 points is nothing at 26,000 compared to when it was at 10,000. But, you're so used to being in a low volatile environment that it seemed like a big deal. But even on this day, SPY didn't make a lower low. So no lower lows this week. It just went straight up. And then we get the inside day, closing out on the highs. QQQ gaps up a little bit and still just kind of hanging near the highs. Small caps finally make a move. Still would be inside 3-bar pattern here, but did take the inside day to the upside. But these still 3 days still complete within that bar's range. But obviously the collapse not on. I've been talking about it since I made it. I made a video called "The Greatest Story Ever Sold," where I show you a bunch of hoo-ha about technical analysis, but then I go into breaking things down into 3 scenarios, and it really cleans things up for you. I'm going to point out some of that stuff. The Greatest Story Ever Sold is on my YouTube, Smith's in the Black, all one word. You'll see it standing there bright as day. So one of the things I want to show you, so here if we go to IBB, the IBB goes inside day. All right, so that's scenario 1. There's only 3 possible outcomes from anything. All right, and once you understand that, then you can follow along. All right, the first scenario is inside bar. Can't take out the highs nor the lows. There's scenario 1. Scenario 2 is you take out one side of the range. Now either you stay out or you don't, but you only take out one side of the range when this bar closes. The third scenario that can possibly happen is you take out both sides here, outside bar. All right, and that's important because since we know outside bar exists, they can't exist unless they go 2 first and take out one side. That's important to know, right? Because if you come back in, you become potential 3. So in this case, all right, we go 3, 1, 2, 2, right? So the 1, 2, 2 is going to be the reversal, right, of this. So we know that this is on in the IBB, and so it's also called the rev strat, right? Because you're reversing the inside equilibrium. And so when you take this high out today at 111.52, you can buy the IBB, but we know you get more bang for the buck out of the Labu. So when it does that, Labu comes up here through 86.91, goes up 88.23, but it also tells us to go look at other things. So we go to ICPT, all right? So here, a 3, all right? A 3, 2, 2, 2. But whenever we see a 3, we know that's a fractal broadening formation. It has to be because it took out both sides of the range. So whenever we get back into one of these 3s, we're looking to complete, as long as we go 2, 2, we're looking to complete and take that out, right? Which we got in ICPT today, and so that was real nice. Coming up above 53.91, bam, comes 58 and closes at 57.72. Now, if we go to something like MYGN, weekly, all right, you're going to see the 3, which is the fractal triangle outside bar, and it gets outside of that, which means is it's a range expansion on continuation. What do I mean by that? Because this bar was outside of this, it means the sellers were aggressive enough to sell below the previous low, and buyers were aggressive enough to buy above the previous high. All right, and if they did it once, they might try and do it again, right? Because it opened here, went down, then came back up, and then pressed through. So this is a scenario 3 into 2. This is stuff that we look for. So if you look at the week on the monthlies, you're going to see this same pattern in Texas Instruments, and you're going to see it in NOW, right? And so we look for that kind of stuff, right? Also, Weight Watchers, the combinations of the 1, 2, the inside bar breakout. So on the monthly here, inside month to the upside, I've been talking about this the last few weeks, right, over 52.07, still going. And at that point, remember, it was also weekly, 1, 2, and now the 2 continuation. And then you go to the daily, and today, you can do it again. Inside bar, boom, continuation. So you have the 1, 2 set up on the month and the day to 61.96. So there you go. There's another $1.50 or so on the stack over there. Saw a lot of people looking at Boeing and be like, is Boeing a short? Because this thing's going up so much. This is not what a short looks like. See, this is its monthly chart. That's not what a short looks like. Now, if you were going to short it because it is volatile enough, and it did come in a bit, certainly not on a day like this, right? But as soon as it opens the next day, now you can go after it. As soon as it's lower than it opened on the on the daily and the 60, because now the immediate direction is down. In here, you're just going to get carried out. Right, so if you're going to do it, that's how you do it, right? And if you really were looking for shorts, it's been the utilities. This month's been the utilities, and it's been the REITs. VNQ, right? So VNQ, once again, you see that outside bar 3 continuation down, and some of these things just get murdered. The VTR, you can just see these things just getting crushed. And so that's what the short side is. Now, if we look at Goldman Sachs today, this week, what you're going to see here, Goldman Sachs, and that weekly is an outside week, right? And so the good thing about that is once something takes out one side, right, goes 2, but comes back into the range, it's a potential 3, which Goldman Sachs did here, right? This bar turned it from 2 into 3 for the week. And the good thing is once you do that, like I said, it turns into a fractal triangle, which I'll show you on the 60. Like so, right? So you can nail that all the way down, and then it goes inside day. Here, I'll clean this up for you. Then it goes inside day, right? But when it goes inside day, that's a 1, and here's like so. See this? Lower low, higher high, lower low, higher high, bam. Now, once you get outside of here and come back in, you go potential 3 on the day. And that's what we got. That's what we look for. It comes back through, retakes the opening, so the daily and the 60 are green, and boom, that opening was at 251, would come out 256.12. So I don't expect you to get this all right now, but this is the kind of stuff that is simple to understand. It's only 3 things, and when you combine all this stuff, you can put it together. One more last thing, since it's OpX, monthly option expiration, creating synthetics. And by that, what I mean is, if you look at Amazon, and we could have used a little bit more on this one, but if you go to Amazon and you go to the inside on the 60, here's what you're going to see. And let's tighten it up. Like I said, it's a little tighter. We would have preferred this thing to really move around, but here, inside scenario 1, inside bar, takes it out at 1297.56. At that point, you buy the 1,300 calls. All right, because it's still cheap. There's not much time going on them. And as it goes through there, you sell right into it. All right, you sell shares against it. And be like, Rob, I don't got the money to do that. Well, it depends on who you clear through and all that kind of stuff. But you got the option, so you don't cover the options. You short the stock, right, to lock in your profit, because that creates the synthetic put. You've locked in the profit on the option on the upside, and then if it goes down, you're short the stock, all right? So then, if we go to a 30-minute, here it goes inside on the 30 and pukes through that 1,300, right? There, you can buy the 1,300 put, and you got 2/3 of a Texas hedge going your way, and just stop it even, right? Because you can't get hurt on the stock going up because you've got the option. You got your synthetic put with the stock, and then you got real puts. So now you're short stock and long puts. As it comes down here, you keep it even, and then as long as it doesn't take you out by the end of the day, you just cover, and there you go. All the way back down to 1294. You made money on the upside and the downside. Were protected with options and took advantage of the options on the way down. All right, so that's going to do it for this week. We've got a lot of earnings coming out, so should be lots of gappers and stuff like that. Whenever you got at all-time highs, it's going to be somewhat of a Momo to see if things can keep going. But certainly, I make a weekend video. If you want to get that, contact T3. I make that every weekend of the breakdown of the sectors, the subsectors, everything y'all want to know. So hope everybody had a great week and has an even better weekend. I'll see you next week. I'm Rob Smith with this week's Market Wrap-Up.